Even after watching all of those ICT trading strategies, you are stuck in trading and you don't know what to do and how you can actually make profits from trading. Don't worry, because in this video, I will be simplifying an ICT strategy for you in a checklist format so you can easily follow it. Stick around till the end of the video so you don't miss anything important. Grab your notebooks and let's get started. First of all, we have to determine the order flow of the market, whether we have a bullish order flow or a bearish order flow. This is necessary. As they say, the trend is your friend. If the market is creating higher highs and respecting bullish PD arrays, then we have a bullish order flow. Similarly, if the market is creating lower lows and respecting bearish PD arrays, then we clearly have a bearish order flow. After that, we have to mark all of the important liquidity levels. These can be the previous session's high or low, the previous day's high or low, or even the previous week's high or low. Now, we have to wait for one of these liquidity to be purged. Soon after that, we have to wait for a market structure shift with displacement that leaves behind a fair value gap. If you don't know what is fair value gaps and how to use them, then I would suggest you watch this video on my channel. It would help you a lot in understanding fair value gaps. Moving forward, as soon as we get market structure shift, displacement, and fair value gap, we will set a limit order on that fair value gap, and stop loss would be above the recent swing. Take profit level will be either a 1 to 2 risk to reward ratio, or if you are a beginner, you can also target the lowest hanging fruit, which is nearest opposing liquidity. Before continuing, if you want to master profitable trading in weeks, check out the description below for the ultimate trading secrets and private mentorship. This strategy checklist works on all of the pairs and asset classes, but you can stick with the most popular ones, which are Euro USD, GBPUSD, and Nasdaq 100. You can also backtest the pair of your choice and see which pairs work well for you. Now for timing, you can look for these setups in the London session, which is from 2 a.m. to 5 a.m., and New York session, which is from 8 a.m. to 12 a.m. These are the times with the most volatility and where high probability setups are most likely to form. As always, these timings are in New York local time, so make sure you calibrate your trading view chart to Eastern Standard Time. Now let's look at some examples so we can understand this strategy even better. Here we are on GBPUSD on a 15-minute time frame. We are at midnight open on Monday. We will be marking the previous day's high and low, but we can notice that the previous day was Sunday. Sunday's range is usually ignored and doesn't matter, so we're going to use Friday's range as the previous day's high and low. Let me mark Friday's high and low real quick. After that, we will be waiting for either the previous day's high or low to be violated. As we can see right here, we have taken out the Friday's low. Now I will be dropping down to a 5-minute time frame and will be patiently waiting for market structure shift when price is close above this recent swing high. The price must close above the swing points, not just a wick through it. Here we go, price created a market structure shift, and now we will be waiting for a fair value gap to be formed, so we can take our trade and make some money. A fair value gap is formed. This is where we will be taking our entry. Your stop loss could be below these recent swing lows. For profit target, we have these equal highs above which we can target, or even this buy side liquidity. We can also aim for a classical 1 to 2 risk to reward ratio, or even this close opposing liquidity, which is also known as lowest hanging fruit. If you are aiming for larger profit targets, you can also take partials on the way and book some profits. Moreover, if you have correct daily bias, you can go for an even larger target like the previous day's high as well. For this example, I will target these equal highs as they are most likely going to be targeted by the price delivery algorithm. You can see this trade is giving me over a 1 to 4 risk to reward ratio. Let me place a limit order on the end of this fair value gap, and we will risk 1.5%. Let's see how this trade goes. We were tagged in the trade right away. Just like that, this trade was a winner, making us over $6,000. For the next example, we are on USD Canadian dollar on the 15-minute time frame. We will be marking the previous day's high and low, and wait patiently for one of these liquidity to be purged. Once either low or high is taken out, Now I will be waiting for the market structure shift. We got our market structure shifted over here. Now we will be looking for a fair value gap to be formed, which we got over here. As we know, overlapping PD arrays are the strongest, so I will be taking my entry on the fair value gap and the breaker block overlap. Stop loss will be below the recent low, and for the profit target, I will be aiming for a classical 1 to 2 risk to reward ratio. Let me place a limit order risking 1.5% and see how it goes. The price initially went above, but our idea is still valid as the price hasn't tapped the take profit level. Soon after that, price retraced and we finally got our entry. Just within 2 to 3 candles, price went and smashed our take profit level, giving us such a clean trade and making us around $3,000 per trade idea. That's how easy it is to trade this strategy. You don't need tens of concepts to be profitable. It only overcomplicates your trading. As a bonus for watching this far, here are a few things that you have to keep in mind while trading this strategy to increase your accuracy and win rate. Avoid trading days with high impact news like FOMC, NFP, CPI, and PPI. The market can be volatile and or may be in consolidation, so it's better to stay away from trading these days, especially if you are a beginner. Don't force trades, as it leads you to take low quality trades, causing you to enter a losing streak. Only enter the trade when we have a market structure shift with displacement which leaves behind a fair value gap. I want you to backtest the strategy and try it for yourself before using this in the live market. If you found today's video helpful, great! Help us reach 40 likes, and I'll share the market maker model in the next video. If you've watched this far, I'm sure you'll also love these other videos on the screen for more trading content. Thanks for being part of our community.